Howdy, swings. The Michigan Consumer Sentiment Release has had a positive impact on the markets. It turns out that the bearish sentiment in the market that we feared in yesterday's video is not as strong as we thought. But is it really? Where will the most volatility come from in this rally? Let's find out with our daily swing price forecast. Here are daily market moves. While generally quiet, gold, Bitcoin, emerging markets did well. S&P 500, 5,554.27, 0.2% up. Dow Jones, 40,659.83, 0.24% up. Nasdaq, 17,631.72, 0.21% up. Russell 2000, 2,149.2, 0.17% up. Gold future, 2,545.6, 3.77% up. VIX index, 14.99, minus 1.58% down. Here is daily sector performance. Top performers. On Friday, the best performing groups included banks, consumer goods, agricultural chemicals, media, autos, housing, and utilities. Underperformers. Some areas that didn't do as well included semiconductor equipment, REITs, healthcare, capital goods, energy, restaurants/fast food, and travel/leisure. Here are the reasons. It was a relatively quiet day for the stock market. Stocks saw a bit of profit-taking in the morning, but started to rise after a positive Michigan sentiment report was released at 10 a.m. Eastern Time. Weak housing data and a few earnings reports had minimal effect on the market. There were some hopeful headlines about a possible ceasefire in Gaza on Friday afternoon, but investors remain cautious. Here are things to consider. Investors might not need to overthink the market too much. Recent earnings reports for July are healthy, growth seems resilient, inflation is cooling off, and monetary easing might support stock prices. The Michigan Confidence Report for August was generally positive, with an improvement in expectations and stable inflation expectations compared to July. UK retail sales slightly exceeded expectations, providing some positive consumer data. There is growing pressure on China to introduce more stimulus measures due to ongoing weak growth data. Applied Materials shares were impacted because their guidance was only in line with expectations, but the results and outlook were still positive. The U.S. and its allies have introduced a new plan for a Gaza ceasefire, hoping it can lead to an agreement. Talks are expected to continue soon. Iran will delay its response to give the ceasefire process more time to progress. Here is daily market forecast for swings. The weekly upside potential remained strong, with the market reversing to the upside today. The daily market upside potential has improved and moved higher, but is attempting to reverse to the downside. This may be one of the reasons why the market sold off early in the day today. Resistance at the S&P 550 remains strong, but volatility is increasing with the Fed's agenda. Therefore, the risk was increased. The biggest source of market volatility right now is the FOMC minutes and the Jackson Hole meeting. Due to the strong bulls, we might see Monday to be similar to today despite the greater downside risk, with the possibility of sideways and upside closes. However, we do expect 1 to 2 down days to occur before next Thursday due to the increased volatility and daily downside potential. Investors should consider that most downside attempts will likely fail, but there could be a sudden pullback at any time over the next few days. While we still consider the current uptrend to be a rally, it is important to remain cautious and exercise proper risk management. Here are some additional insights. Economic indicators suggest that the economy could be improving modestly, which could lead to the Federal Reserve cutting interest rates, especially next month. For now, a smoother path seems more likely, with low inflation giving the Fed room to cut rates. Here is devil's advocate. The opposing scenario is that the market is likely to fall significantly below 53.50. In this case, it could be a bargain buying opportunity for bullish investors. The rationale of this scenario is as follows. The rest of July's earnings releases may not be strong. The market's expectations about the Fed interest rate cut may be overly optimistic. July's housing starts and building permits came in below expectations, and the Atlanta Fed's third-quarter GDP forecast was revised downward. Concerns about the health of the labor market are growing. The geopolitical situation remains uncertain. The SPX has a high price-to-earnings ratio, so stock valuations may be inflexible if the economy faces a downturn. Neither Trump's nor Harris's policies appear to be particularly positive for the stock market. While the opposing scenario makes sense, we believe it is unlikely that the market will fall without new events related to the federal. Nevertheless, viewers should heed the risk warnings in this scenario. Here is the conclusion. While the market's weekly upside potential is still strong, the daily market is increasingly close to a bearish turn. Accordingly, the S&P index is balancing at 5550, its fourth resistance level since August 5th. The volatility of this rally will largely depend on upcoming Fed events. Wednesday's FOMC minutes and Friday's Jackson Hole meeting could have an impact on market volatility. Comparatively, Monday is likely to close higher, similar to today. Traders may be wise to remain optimistic and use hedging appropriately, even if the rally is a bit bumpy. Considering both key forecasts and alternative scenarios can help you manage risk more effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.